Now to our discussion segment. Our attention on the program today is on the decision of the Central Bank's Monetary Policy Committee meeting. The CBN said its core mandate is to fight inflation and to ensure price stability. It projects that things will begin to moderate by May onwards to the end of the year. The MPC also said it made the decisions based on economic data and market conditions. In view of that, the next decision will be thoroughly arrived at. It also says it continues to make the market as open and transparent as well as liquid as possible, as it has met the backlogs of contractual obligations. So many issues the MPC addressed, which our guest is going to comment on. Our guest is Tilewa Adebajo, CEO of the CFG Advisory, who joins us from Lagos. Hello, Mr. Adebajo. Thank you for joining us.
Yes, good afternoon.
Well, we're just within a short period of time, we're talking about 600 basis points. Why is the CBN tightening when it seems to be hot in growth, and for how long can it continue to tighten?
Well, there are two sides of the coin. First of all, your introduction, you said the debt profile is almost at 100 million, and also the money supply is also at close to a high of 100 trillion. So 100 trillion. So both debt profile and total money supply is at close to 100 trillion. So, and the money supply that you are seeing, which is M3, 40 trillion was added in just 1 year. So in the last 1 year, you have seen an increase in money supply by 40 trillion, and that is what is driving inflation. So when you have that amount of money in the system, you have to be able to, ease off and be able to constrict money supply. And that's, you do that by tightening and by increasing interest rates. Now, who are the beneficiaries? The people who are saving money. So this is the time for you to save. So the CBN now needs to also reduce the loan to deposit ratios in banks so that savers and investors can benefit. So at the end of the day, there are two sides to the coin. As he said, the key mandate is price stability. The purchasing power of Nigerians have reduced with 133 million Nigerians in multidimensional poverty. We have become a sachet economy. So the pensioners also, which a lot of them, when they collect their pension, it cannot go anywhere. That does not work. Even for investors, investors don't like an area of high inflation because real rates are negative. Interest rates, the real yield, and the real return on interest rates with an area of high inflation is negative. So right now, with the resets that the government has done, they are now targeting inflation at 21% by the end of this year, and interest rates is now at 24.7%. So that means that if they achieve that target by year end, we will return value to the system and purchasing power parity will come to bear. So that is really what the objective is. Once you have that, then you can now begin to think about growth. Inflation, interest rates, and GDP growth have a strong correlation. So if the central bank can get inflation to 15% and interest rates lower, believe me, you will see GDP growth of 8%. It has happened in Nigeria before, and it will happen again. So, but first of all, you need to bring inflation down to about 15%. Then you now focus on growing the economy, because what is happening now is that Nigerians have lost their purchasing power, and we need to return value to the economy. So, and as you've seen, money supply at 95 trillion naira, close to 100 trillion. Also, the debt profile is not the best. So at that levels of increase in money supply, you need to put some controls. So it's a phased approach for the first phase, and then we can now begin to concentrate on growth later.
Okay. Some analysts argue that it's not just a monetary policy thing, that the fiscal side has to come into this. So what do you expect from the fiscal side? What should they bring to the table so that we see inflation being tamed in a very short time possible?
Okay, first of all, I think that's definitely, and you see also what is happening now with this target that inflation will be now at 21% and interest rates at 24.7%. What you are beginning to see now is the fact that investments is flowing in. Right now, foreign portfolio investments started with $1 billion. If we can sustain that rate for February, we should be able to get $12 billion worth of foreign portfolio investments. In 2019, we got close to $20 billion of capital inflows, $25 billion of capital inflows, of which $16 billion was foreign portfolio investments, because we had the right incentives. Even in 2013, same thing happened. At that time, it was about 20 billion. So if we're going to return to that, we need to get this economy back to equilibrium. And of course, the fiscal side is playing a very significant role now, because right now, with this rate structure, you have an alignment between fiscal policy and monetary policy. Why do I say so? Last month, you saw the fact they came up with 2 trillion in revenue, but they only shared half of it. So if they're getting 2 trillion in revenue on a monthly basis, that means that by the end of the year, they'll be close to 24 trillion, which is a lot of money. Delta State alone got 38 billion. Lagos got 25. Rivers got 24 billion. So this is big money coming to the states now, but they're not sharing all that money. They could have got more. So that money they're keeping, they're using for debt service. They're using to be able to make sure that the debt obligations are met. And you can see now that the exchange rate stability you are seeing is as a result of a lot of the inputs from the fiscal side in terms of stability. So they're beginning to contribute their part to that system. So that is why you are now seeing the alignment of monetary and fiscal policy. So we expect them to continue along this rate, so they continue to service the debt obligation. And this increase in interest rates you are seeing is also going to affect the government, because the cost of borrowing for government is also going to go higher. So the fiscal side also have to do the heavy lifting to ensure that they continue to make these payments. And also, the biggest part of the fiscal side now is that they have now resolved the issue of the ways and means financing. That has been reflected, and that's why you see the money supply has gone up. That is why you see that the level of debt has also gone up. So we have cleaned out the books, and we know the true position of the accounts. So we now know that the debt profile is close to 100 trillion, which is about $180 billion. And we know that the money supply is at a particular rate. So we now know what we are facing. Debt service now is 11 trillion for this year, which is higher than both recurrent and capital expenditure. So on the fiscal side, we now need to see those revenues coming in and what they're doing with the savings that they are making every month. And if they can continue at this pace, we won't have too much of an issue.
Okay, the MPC still wants the CBN to expedite the recapitalization of banks, despite the fact that banking sector remains sound and stable, according to the CBN governor. What's your opinion on that?
Well, bank capital adequacy is something that is a process. It doesn't remain static. The last time we did it was 25 billion, but even the banks have not waited to remain at 25 billion, and they begin to push up, as you see again. You can see the issues of devaluation and strengthening of the economy. So for me, that is a process. And from time to time, you check it out. You make sure the capital banks are sound. Doesn't mean that you don't want to increase your capital adequacy, which is say the shareholders should go out and get more funds to recapitalize their banks and increase their shares and move on. So that for me is a cycle that happens everywhere in the world. And from time to time, the last time we did the bank recapitalization was quite a long time ago. And I think we're overdue for one. There's been devaluation of the currency. We've seen the problems and challenges with the economy. So the banks need to step up to be able to support, the challenges and the growth in the economy. So for me, it's a normal process. It's nothing to worry about.
Okay, some analysts believe that interventions in terms of supplying liquidity into the market by CBN itself is somehow distorting. Are you on the same page with those expert.
In terms of the liquidity, can
Yes.
you repeat that question again?
Okay, it says that some analysts believe that interventions in terms of supplying liquidity into the market by the CBN in itself is somehow distorting. Are you on the same page with those that have that
Which
particular point of
intervention?
view?
For foreign exchange intervention or cash intervention?
I think it's cash intervention, foreign
Okay.
exchange intervention rather.
Foreign, you are talking about the intervention to the Bureau de Change,
Yeah.
I believe. Okay. There's a new market called NAFEM. Okay. And I think what people don't understand is that the central bank no longer controls the foreign exchange market. Okay. We have a system now we call NAFEM. Okay, which is a new system that is called willing buyer and willing seller. So the Central Bank of Nigeria is also now a participant in that market. So when some people were bringing in money at 1,700 and there was willing buyer, willing seller, nobody complained. So the central bank also is now a player in the market. So, and the central bank has its bureau de changes, and they've decided that, okay, we also want to participate in this market, okay, because maybe the central bank is a force. And they now decide that, okay, we have our own group of bureau de change operators who are, and they are our willing buyers, and we are also willing sellers. And we've decided we're going to sell to them at 125. And we've told them that they cannot sell on to customers for more than X amount. It's a willing buyer, willing seller situation. So that is what you call a market. So we shouldn't be complaining. There's not a distortion. When some people are putting it at 1.7, you don't call that a distortion. So let everybody go and bring their foreign exchange, and let's have an open, transparent market, which is what we need. Like we said before, at a point in time, we're getting $25 billion from capital importation, but foreign direct investments, portfolio investments. We get another $25 to $30 billion from diaspora investments. And the central bank, in the heydays whereby there was no subsidy, was getting $10 to $15 billion, a year. So we have about close to $60 billion of intervention in the market that is possible. So the central bank, as a player, can decide how he wants to sell his foreign exchange. So, which is good. But what must not happen is that the central bank will sell at a rate which is lower than the market, give it to some people in and they will now turn around and sell it at the black market at another area. That is what you call distortion. So that is not what is happening now. You go to the market, you sell. So let's understand that we have a new system in the market. And then also, the central bank governor said in his speech in November in the Chartered Institute of Bankers that the central bank is coming up with a new foreign exchange system, which is going to be backed by legislation. So let us wait. I believe this is work in progress. So let us wait until that new system also comes out. But in the interim, we have a NAFEM exchange rate mechanism, which is market driven, which can go up and can come down based upon sound market fundamentals and willing buyers and willing sellers. And that is what you see now in operation that a lot of people have not gotten used to. So the Central Bank of Nigeria no longer controls the foreign exchange market. It is just another player, because the central bank can also go into the market and decide to buy, not only sell.
Okay.
So that is the way it works now.
Okay, thank you very much, Mr. Tilewa Adebajo, CEO of the CFG Advisory, who joins us from Lagos. It's a pleasure having you on the program.
Thank you. Good afternoon.